Hi guys, I'm Nicola Mackenzie, co-founder of Dunham McCarthy, and today's episode I'm joined by a very special guest, Jo Wall, who's here from Skipton Building Society to tell us all you need to know about the new 100% mortgage product. So if you're a renter and you don't have a deposit, then this interview is one not to be missed. Now guys, before we get into the detail of today's video, make sure that you hit that subscribe button and the notification bell so that you don't miss any future video uploads from the team here at DM Mortgages. And today, like I say, I'm really excited actually to be joined by Jo Wall, who's here from Skipton Building Society, because I'm sure that if you've been paying attention to the news, you've heard all about the new 100% mortgage product that is being offered by Skipton Building Society. So I've invited Jo to really just tell us a bit more about it. So Jo, welcome.
Well, thanks, Nikki. Thanks for inviting me.
No worries, thank you so much.
Really pleased to be here.
Good, thank you so much for joining us today. Can you tell us then, because like I say, there's been a lot recently in the news about this new 100% product, which I'm excited about. I think it's a game changer for the mortgage market. But can you tell us a bit more about what the Building Society, why you introduced the product, what are you hoping to achieve from
absolutely.
doing that?
We're always doing research into how we can help more people own their own home, and that's what this is about. It's not about getting a mortgage, it's about helping people into their homes. And we've done extensive research over the last couple of years to work out how we can help more people to get onto the property ladder. And a very underserved part of the market that came out of the research is those that are renting a property at the moment. It's really difficult for a renter to save a deposit. I mean, we all know we've all got mortgages. You're paying your mortgage, you're paying your associated costs, your household costs, etc. How difficult would it be then to say to you or a customer in that position, we want you to save £300, £400, £500 a month so that you can now buy your own property? It's really difficult. And when we've looked at the research, the average time it takes a renter to save a deposit, average deposit being about £24,500, it's about 8 years. So it's an awful long time. Yeah. So this product, track record, is designed for those customers, to help those customers who are renting at the moment to get a step onto the property ladder and own their own home. Brilliant.
I think it's such a innovative product. It's very much welcomed anyway from myself and the team here at Dunham McCarthy, and I think that the time is right as well.
Yeah, we do.
So no, it's good to see, and I'm sure as well we'll probably see a lot more lenders start to follow suit. But we'll see. Yeah. The fact that you guys are the first back into that space, though, I think is a really good thing. Yeah. So, okay, so can you then, Jo, tell us a bit more about the criteria, because not everybody obviously is going to qualify for this product. Yeah. So can you give us a bit of an overview of some of the key criteria points with this product?
Yeah. I mean, you're quite right. This is not a product for everybody. And you wouldn't expect us to come into this market and say everybody can have a 100% mortgage and put no deposit down. Actually, the LTV is kind of irrelevant. This is about helping people make that first step, own their first home. It's specifically targeted at customers who can demonstrate to us that they're paying their rent and associated household costs for a period of no less than 12 months within the last 18 months. So it's a very specific target market, and we're making sure that we're lending responsibly by having that track record for customers to be able to demonstrate to us, yes, I can afford this, but obviously we've got to make sure that their mortgage payment is not going to put them in a worse financial position than their current rent payment. So there's checks and criteria that are in place to make sure that that customer's not going to borrow more than they should do.
Yes, and I think as well, just expanding on that, that's the key point, is that, and that's what I like about the product personally, is that it is a responsible approach that you're taking as a lender. You're not, as you said, just giving it to you're not making it a relaxed criteria, shall I say?
Absolutely not, no.
And when I've spoke, the first thing that a lot of clients sort of come out with, and people that I've, friends and things like that, is, oh, that 100% mortgage is back again. It's a reminder of 2008.
Yeah.
And sorry to bring it up, but because I know detail of the mortgage product, I know that you're doing it responsibly, but not everybody watching does.
Yeah.
So I think it's key for people to understand that it's nothing like the sorts of products that were being offered back in 2008.
Absolutely. Yeah.
And yes, there are risks associated with it, but again, as a lender, you're taking the responsible approach. I think that that's the key point here.
Absolutely. Yes.
So can you then tell us a bit more on the topic of risks, because there are risks like there are with any mortgage.
Yeah, of course.
What risks would you say apply to 100% mortgage product?
Well, high loan to value, obviously. Any high loan to value lending for a lender carries that additional risk because there's less money being put in by the borrower. So we're taking a higher risk as a lender. However, you can mitigate some of that risk by making sure that you have got the right prudence in place to make sure that that customer's not going to be in a worse off financial position by taking a mortgage up with you. And every lender in the market wants to make sure that their customer's not going to get themselves into financial difficulty. And that's why we run affordability checks. And in this case, with the track record mortgage, we're running a rental calculation as well. So that's a double up really to make sure that we're ensuring the customer's not going to take on more debt than they can manage.
So there's two calculators with this
two
product,
calculators
not
to
one
fill
like
in.
traditionally there is.
Absolutely. There's three parts of the eligibility process that you as a broker will go through and a customer needs to check. One is you need to check that you tick all the boxes as far as policy and criteria are concerned. So do you meet all those bits? And then there's the two calculations. So you run your rental affordability calculation and then you run your lender affordability calculation. And we're obviously going to use the lower of the two figures. So if your affordability comes out lower than your rental track record calculation, then obviously we're going to use that lower figure. And if it's vice versa, we're going to use the lower figure.
Sure. So again, just making sure that
it's affordable.
Sure
It's affordable for the customer, absolutely.
Can I also touch on as well the fact that the product is only available on a 5-year fixed rate?
Absolutely, and there's good reason for that as well. I'm glad you brought that up. So with this product, there's been a lot of press about, negative equity.
That's it.
And, the worst thing in the world is you don't want a customer to end up in negative equity. And you can mitigate that. You can never guarantee it, but you can mitigate it with this particular track record product. There's only one product available and it's a 5-year fixed. So there's no option for the customer to take a shorter term product. We've also limited the maximum term available to 35 years so that we can ensure they're paying a little bit more of the capital off over that period, getting the mortgage balance down over that 5-year period to try and make sure that they don't drop into negative equity.
That's it. So no, I think again that they're really key points because negative equity is one of the things that come up in, when people say, I'm interested in this product, but how does that work? But also I think it's important to remember that property should be a long-term investment as well, which is the approach that most people should apply when they're looking at owning a home. And if it's a long-term investment, then the risk of negative equity, yes, it still can have an impact, but of course it's going to have less of an impact than if you're looking at buying and selling quite quickly.
Yeah, indeed. Okay. This is the first product since the credit crunch that is a true 100% loan to value or up to 100% loan to value product with no requirement for any intergenerational or family help. So it's really going to help that kind of community out there that can't rely on family to get themselves on the property ladder, but can demonstrate to us that they can cover the costs of a mortgage and associated household costs because they're already doing it in a rented property.
That's it. Because not everyone is fortunate enough to have family members that can stumble 5% deposit. And there recently has been another product, I won't name the lender, but an innovative advancement where you can give the deposit to the borrower as a loan, the family member or friend can, which I think is great. And that's definitely a step towards making sure that more people can get on the ladder. But ultimately, you still need to find that friend or family member that's got that money. And not everyone is fortunate enough to have those people in their circles.
This is it. I mean, I think innovation in the market around particularly this sort of sector is great.
Yeah, exactly.
And we need to see more of this to help more first-time buyers onto the property ladder.
And I'm sure that there will be more of it.
There will, I'm sure, yeah.
Now, obviously Skipton Building Society, the same as with any lender, can withdraw products without much notice at all. And of course, if your product is the only one in the marketplace at 100% loan to value without assistance from family members or friends, again, is there anything there to help borrowers if you do decide to pull the product?
There isn't really, unfortunately, and we've been quite clear about this on all of our literature and on our website, that the product could be withdrawn at short notice or no notice at all. We've already discussed there's other options available for clients at the moment. We're hoping that this might stimulate the market a little bit and invite other lenders in to do a similar sort of product or something to cater for clients.
Which would help people if that ever was the case.
Yeah, and then that will help you as an advisor and the customer, because there'll be more than one option.
Yes.
We're acutely aware that we don't want to leave customers high and dry. And if we had our way, we would stay in the market continually, but we can't give that guarantee because there's, all the regulation and all the other things that go with it, but also we don't want to take too much risk as a lender.
Yeah.
We're a mutual building society, we've got our members to think about. So, it's important that we do factor those things in. And that's why we have been quite clear and said, look, if we withdraw the product, it could be at very short notice.
Okay. Can I ask just to give as much notice as you possibly can?
You can ask whether you'll get that or not is a different matter.
And I'm sure you'll know as well as I will, Joe, that one of the things that has been stinging a lot of brokers and customers of late is, lenders deciding to pull products over the weekend and things like that. So I just think certainly for me as a broker, and I think I talk on behalf of most of brokers out there, just as much notice if you do go down that road as possible would be much appreciated.
Yeah, I'm sure the teams would love to give as much notice as possible on and we do try where possible to give at least 48 hours notice of a product withdrawal where we can.
That's it.
It would just depend on the circumstances, of course.
No, that's fair enough. Can I also go back to, so we were talking earlier on about the calculations. Now, I've run a few calculators for clients that have been interested in this product, but one of the other, I suppose, things that I want to ask you about is the affordability does tend to be a lot lower, not a lot, but fairly, a fair bit lower than what a client might be able to get if we're just looking at their salary multiples. Yep. Now, I appreciate why you're doing that as a responsible lender, but is there any, do you think that is something that may change to help more people? Because, I've been telling clients, at the end of the day, you've got to take the rough with the smooth a little bit. If you're not putting any money in yourself, you've got to compromise on something. Yeah. And ultimately, we're encouraging clients to consider moving maybe to an area or location that you didn't, intend on getting on the ladder is probably one of the more important factors, but is there any other advice you can give to people?
Yeah, it's a really good point on compromising on property and location, because definitely, the customers that have come to us so far are doing that. They're making a compromise on the property or the location. Not all of them. No. Some of them are making that compromise on property or location.
Yes.
And you're right, it's not for everybody.
Yes.
And we've got to be responsible. There's been nothing like this for a good few years, so we have to take baby steps. Yeah. And make sure that we're lending to the right customers for the right reason. But never say never. We don't know what volume we're going to, it's early days yet, we don't know what volume is going to come in, we don't know how many cases we're going to get coming through the doors.
Yes.
And if we're not doing the level that we think we should be doing, then there might be some tweaks to policy and criteria. It's first time buyers only at the moment. That could change, who knows?
Yes.
As you've said, the rental calculation, maybe there might be some changes there as well. So never say never, but at the moment we just need to be cautious and prudent. Let's see where it goes first. But for me, it's a bold step, and we know it's helping people already to get onto the property ladder and to own their own home, which is great.
Definitely, it's a very exciting product. And is there any other advice or tips that you might want to give to anyone that's interested in exploring this product in a bit more detail?
Yeah, of course. Look after your credit.
Yeah.
So your credit profile's good.
Yeah.
It's not available to anyone under the age of 21.
Okay.
So, and for that reason, because we know the 21-year-old has a slightly better credit profile, and they've managed to build up that track record of paying their rent as well. But apart from that, think about where you want to live. Think
Yeah.
about where you're living now and think about where you want to live. And are you being realistic? So look at your options. And if you prefer to own your home rather than to rent it, then you might have to make some of those compromises that we've talked about.
Also, can I actually add something in there? Am I right in saying, and I remember this from when you came to visit our team to give us more information on this product, the 12 months history has to be within the last 18 months.
Correct.
So if somebody was renting say 18 months ago for 12 months, have gone back to live with parents for the last 6 months, they are still eligible for this product.
They are eligible for the product, yes.
Okay,
You just need to make
brilliant.
sure they can find a house within the time period.
Yes, that's true actually, because there's the time. That's a very good
they
point.
could go beyond the 18 months. So that's
Very
just
good point,
one thing
okay.
to watch out for where you've got somebody who might have moved home.
Yes.
If
So
they've been at home for 3 or 4 months,
yes.
and they come to you and say, right, I want to buy a property,
Yes.
then effectively they have to find it within a couple of months.
Because if they're outside that 18 months, that's
yes,
it.
correct.
Good point. Thank you, Joe. So, Joe, that was brilliant. Thank you so much for coming in, joining me today.
Thanks for inviting me.
No worries at all. I'm sure that the viewers have found that really, really useful. So, guys, what I would say is if you are interested in the 100% mortgage product, then make sure that you get in touch with us. I'll put links on screen and in the description below. If you're not sure if the product is right for you, again, speak to one of our team. That is what we're here for. We're here to help you. And of course, if you've not already, make sure that you subscribe to the channel and hit the notification bell so that you don't miss any future video uploads. Joe, it's been a pleasure. Thank you for joining us.
Thanks, Nikki.
And we'll see you soon.